Hello everyone and welcome back to Rito's Analytics. If you're new here, don't forget to hit that subscribe button and ring the notification bell so you can get the most out of your trades with our daily market insight. Now, today is all about SPY, the S&P 500 ETF. We're taking a comprehensive look for the week of September 5, 2023, breaking it down across multiple time frames to give you a complete picture of what to expect. So whether you're a day trader or more of a long-term investor, this analysis is designed to give you actionable insights so you can make more informed decisions in the market. There's a lot to unpack, so let's get started. All right, we're starting off by analyzing SPY on a weekly time frame, which is crucial for understanding the long-term market context. So what stands out here is the undeniable uptrend since October 2022. Pay close attention to this sequence of higher lows and higher highs. This bullish sentiment is usually a green light for long-term investors. But before you jump in, there's more to the picture. We've hit a zone of resistance dating back to the first quarter of 2022. This area is particularly significant because it forms the base of the distribution region for the 2021 all-time high. So the market has memory here, and it's a significant hurdle for SPY. Although we're currently in an uptrend, it's crucial to note a subtle loss of momentum. While this does not nullify the bullish case, it is an early warning signal. So the weekly chart gives us this mixed view. It's generally bullish, but with a side note of caution due to these resistance levels and declining momentum. Now that we've set the stage with the weekly analysis, let's drill down into the daily time frame to get a more granular view of what's happening right now with SPY. As we zero in, it's interesting to note the particular nature of the rejection that SPY is facing. This level served as support in the all-time high distribution zone. Now flipped, it's acting as strong resistance. Here, 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 here. And that's crucial for understanding the market psychology at play. However, don't let that obscure the fact that we've been in a short-term bull trend the past few weeks. Uptrend is marked by a series of higher lows, but take a look at this. What we're seeing right now could be a potential lower high. If this lower high gets confirmed, it could be indicative of a trend reversal or at the least a consolidation phase. Alright, so let's talk targets. Keep an eye on this level. It was a breakout level from a recent double bottom, and it also coincides with previous resistance, making it an ideal target for retracement. As for immediate price action, we could see SPY consolidating within a range. The low 450s to the upper 440s could serve as a testing ground for the market's next big move. Okay, we've looked at the weekly and daily charts. Each offers us unique insights, but to truly round out our understanding of SPY, let's dig even deeper. Stay with me as we zoom into the hourly time frame for an up-close look at what traders should be watching. First, remember that the daily chart gave us a hint of declining momentum. This is even more evident here. Take note of this RSI divergence. Price action moving sideways while RSI is declining. That's often a hallmark of distribution. Alongside, we have repeated rejections at the opening prices and daily highs. Here. These are classic signs of waning buying interest. Now let's pivot to our daily time frame target. If you look closely, there's a fair value gap right at that level. Gaps like these often act as magnets for price. If the price does retrace to our current target, that could be where a new higher low is formed. For confirmation, we look for classic reversal patterns or signs of a liquidity sweep to indicate that buyers are back in control. However, if SPY fails to hold that level, our next downside target would likely be in the low 430s. It's crucial to have these downside targets ready, as the market doesn't always go in the direction we want or expect. Alright, we've gone deep into the weeds analyzing SPY from multiple angles, but knowing the battlefield is only half the battle. Now it's time to talk strategy. Let's talk likely targets first. If the distribution pattern we've identified is confirmed, we could be looking at a drop down to the 445 to 446 area. Given this, you might want to consider buying puts or going short to capitalize on the downside. If you're a day trader, you can wait for this signal over here. Breakdown should occur really fast within a day or two, so you could, assuming you're jumping into puts at that very point, get contracts for 445 following the next day or so. On the flip side, if we observe any reversal patterns or liquidities at the 445 to 446 range, that could signal bullish reversal. In that case, you might want to consider calls or going long, targeting the distribution breakout level at 450 or even higher. Now, there's no telling how long we consolidate down here for that reversal pattern. Assuming that you get in right before the turnaround, you consider calls with a 450 strike with expiration date a few days or even the day of after the point in which you get in. If you're a longer term swing trader, consider 450 strike with expiration 2 to 4 weeks out from this confirmed reversal pattern, and you're good to go. Now, if the supporting breakout level fails to hold and this failure is confirmed, it would be prudent to look at puts again, specifically puts that target the next downside range, likely in the low 430s. For such bearish confirmations, puts with a strike around 430, scouring a couple weeks after this confirmation could be viable. If you found this analysis helpful, don't forget to like, subscribe, and hit that notification bell so you won't miss out on further updates. Until next time, trade smart and stay ahead of the curve.